Hey, do you want to understand how to make a competitive offer? But not just a competitive offer, actually get it accepted? We're going to talk about those top tips today. More right after this. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. We're going to dive into those interest rates first and foremost. So let me show you a chart. It's not a pretty one, but I'll put it up here for you. Over the last 90 days, we have seen rates rise over 1.5% according to Freddie Mac. You can check out the link below to the weekly survey. I always post that link on there. It's just a great survey, great chart to be able to see the historical data of where rates have been and where they're going. Now, while you're down there in that link, please click the like button, click subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Thank you so much. So we've got the interest rates out of the way. We want to talk about how to make a competitive offer, and not just competitive, how to actually get your offer accepted. So I've got a bunch of kind of tips and points here just off screen. And we're going to talk about the first one, and that would be understanding your monthly payment. Understanding that if you're wanting to purchase a $500,000 home, if you go up to 505, what exactly does that mean for the payment? Right? So does that mean it's $22, $38, $44, $60, whatever it may be? And understanding what that monthly payment is will help you make kind of a more informed decision when it comes to value of the home and what you're willing to do in terms of price. Now, next, this is a really important one. Understanding what contingencies you can drop. I'm not going to tell you to drop them. I'm just saying understand what you can and can't drop from your scenario. If you're trying to sell a home, then you are contingent upon the sale of that home. Well, how about this? Get the home sold and figure out how you're going to move in with family until you can find a new property. That will make you more competitive. Is that ideal? No, not whatsoever. Is this market, a seller's market, ideal for a buyer? No, it is not. So find a way to be able to better understand what contingencies are in the contract that protect you, but what can you drop and what do you feel comfortable with? In Illinois, we consult an attorney. We have a real estate attorney involved. Agents will be able to explain it to you, lenders, whoever it may be in your kind of trusted circle, but better understand that. Next of which is understanding what the market value of the home is, and then also understanding what it takes to purchase that property. Depending on what market you're in, properties could be going for significantly higher. I'll put a snip up here. This is from a recent appraisal from a client of mine, and you can see here it kind of goes through to basically give you the assumption that if it's listed today, it's going to go for 101% of the overall value of the list price. So even appraisers understand that. They're notating that in the appraisal reports. Now, some markets, maybe you have to pay 125% of the list price. That's a crazy high number, but understanding what's the market value, what does it take to get there, and where are you at in between? What do you feel comfortable with? Next of which, and this will be a really quick one, but understanding the appraisal gap strategy. And I'll put a link up here to the top on a video I did last week, better understanding what that means, how it applies. If an appraisal comes in lower than what you're purchasing it for, what is your consequence? What's your benefit? What is your change in terms of monthly payment? And then last but not least, and I think this one's really important, understanding what your real estate agent and your lender, don't let your lender off the hook. What is your lender doing to help get your offer accepted? Are they giving you a pre-approval letter that they just kind of typed out in 2 to 3 minutes and say, best of luck, I hope you can find a house, maybe we'll get a chance to work together? What is their process, right? So I have a 5-step process every time that a client is making an offer. What is that process, right? Understand what that lender is doing to help you, and if they're not doing anything, they're probably not the best lender for you. Depending upon the pre-approval letter, agents will tell you the pre-approval letter that you supply with your offer matters to that seller, to that list agent. If you come in with, somebody, some small town bank from another state that nobody knows about, there's just not a lot of confidence in closing there. And if you come in with one of the, better reputational lenders in your area, and they make a phone call and they do a video and they send an email and they do this and they know that, or they have a connection to the list agent, you're going to have a lot higher percentage of getting that offer accepted because the certainty of financing is there. So this is the Mortgage Minute. Thank you so much for tuning in. Again, hit that like button, hit that subscribe, click that bell icon to be notified, and stay safe, and we'll see each other again very, very soon.